Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate speak. Today we are diving into a filing so packed with financial details. It's like trying to understand a toddler's explanation of quantum physics. Herc Holdings just acquired H&E Equipment Services in a deal that reshapes the equipment rental landscape. We're talking new debt, new leadership, and a whole lot of changes. This isn't just about a company buying another one, it's about the potential for big shifts in the market. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for further insights. First up, the basics. This is an 8K filing, which is basically a corporate breaking news report. The date to keep in mind is June 2nd, 2025, because that's when all the big moves went down. Now let's talk about the real meat of the filing, the agreements. Herc Holdings has a brand new credit agreement, basically a revamped loan deal. They've entered into a new senior secured asset-based revolving credit facility. That's a mouthful, but what it really means is they've got a new line of credit to borrow money against their assets. They used it to pay off an older credit line from back in 2019. The new credit line lets them borrow up to $4 billion. That's a huge amount of cash to play with. That $3.6 billion is available to the American part of the business and $400 million for the Canadian part, or possibly back to the US business. They can also use up to $250 million part, or possibly back to the US business. They can also use up to $250 million of that for letters of credit, which are basically guarantees to pay if something goes wrong. This gives them a lot more financial flexibility. This new credit agreement lasts until June 2nd, 2030. This is a good amount of time to have a steady line of credit. To secure this massive loan, pretty much all of Herc's and its subsidiaries' assets are on the line, including all their stock. This means if they can't pay back the loan, the bank can take their stuff. The interest rate they'll pay on any money borrowed is based on a floating rate tied to terms SOFR, plus an extra percentage depending on how much credit they're actually using. Basically, the less they use, the lower the interest. This new credit line comes with a bunch of rules called covenants. They can't take on too much more debt, pay out too much in dividends, sell off too many assets, or mess around with deals involving people they know, like company executives. If they break these rules or can't pay up or go bankrupt, they are in default. The lenders can then demand all the money back immediately, which would be a huge problem. But wait, there's more. Herc didn't just get a new credit line, they also took out a term loan, basically a big chunk of borrowed money they have to pay back over time. This term loan is for $750 million, like the credit line. It's secured by pretty much all of Herc's assets. The interest rate on this loan is also variable, tied to term SOFR plus a percentage or a base rate plus another percentage. This also matures in 2032. Okay, now to the acquisition. Herc acquired H&E Equipment Services through a merger. They made an offer to buy all of H&E's stock for a mix of cash and shares. Most of H&E's shareholders, about 69%, agreed to sell their shares, with a few more tendering through guaranteed delivery. After buying up those shares, Herc completed the deal by merging its subsidiary with H&E. Now H&E is part of Herc. To help pay for all of this, Herc issued a bunch of senior notes, which are basically bonds or promises to pay back money later. They issued 1/2030, paying 7% interest, and another $1.1 billion due in 2030, paying 7% interest, and another $1.1 billion due in 23% interest. These notes are unsecured, meaning they're not backed by any specific assets. They're basically a promise to pay, ranking alongside Herc's other senior debts. If Herc goes belly up, the lenders for the secured debt get paid first from the assets. Then these note holders are next in line, but there might not be anything left if those assets don't cover the secured debt. Interest is paid on these notes twice a year, in June and December. These notes also come with restrictions limiting what Herc can do with debt, payments, sales, and deals with insiders. If there's a big change in control of the company, they have to offer to buy back the notes. With the merger complete, Herc added John Engquist, previously a director at H&E, to its board. Now let's dig into those financials that you've been waiting for. We need to understand what Herc is actually buying. Checking H&E's balance sheet from the end of 2024, we see accounts receivable, which is money owed to them at about $27 million. That's a good sign that they're doing business and getting paid for it eventually. Their property and equipment, which includes all the equipment they rent out, is valued at just over $2 billion. That's their core asset and shows how capital intensive the equipment rental business is. Looking at the income statement, H&E pulled in about $1.3 billion in revenue in 2024. That's the top line, the total amount of money coming in from rentals and sales. After all the expenses, their net income or profit was about $68.5 million. That's their bottom line, what they actually get to keep after everything is paid out. Herc has also provided pro forma, basically what if, financial statements, combining their results with H&E's. This is forward looking and we can see what they are projecting. For example, looking at the pro forma income statement for 2024, combined revenue is just over $4 billion. This gives you a size of the combined business. Net income shows about $260 million. So if the acquisition goes according to plan, this is what they are projecting. But pro forma is not reality. So what's the real story here? Herc Holdings has made a big bet, taking on a lot of debt to acquire H&E Equipment Services. They are trying to consolidate the rental market. On the plus side, they now have a much larger business, a wider range of equipment, and more locations. This should help them win bigger contracts and serve more customers. However, they've also taken on a lot of debt to make this happen. Those loans and notes are going to cost them a lot in interest payments, and they have to make sure they don't break any of the rules in their credit agreements. The big risk is whether they can actually make H&E and Herc work well together. If they can't integrate the two companies efficiently, they won't achieve those cost savings. Overall, this is a risky move, but it could pay off big time if Herc can pull it off. They're betting that bigger is better in the equipment rental business. Alright, that's our breakdown of Herc Holdings' latest filing. What's your take on this merger? Will they be able to manage that debt? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for even more insights. Thanks for watching and see you next time.